Today is a historic day. For the first time since before the pandemic, July of 2019 to be exact, housing supply is up. Now this increase is small, but it's a really great indicator that the housing market is finally starting to shift from more of a seller's market to now we're starting to edge into a buyer's market. And a great indicator of that is that home sales have fallen 16% year over year already as buyers are disappearing from this market and sellers are starting to panic. And we're also finally starting to see prices soften up as they have peaked at just over $400,000 in June, and now those are starting to decline, and now median home prices across the country are just under $400,000 and continuing to decline. But prices are not falling equally all across the country, and certain markets are definitely being hit harder than others. And Florida is right in the center of the crosshairs as the market that experts are predicting is going to have the biggest crash, and the crash is coming soon. Now you'll want to stick around to the very end of this video because I have a fantastic chart that details exactly what's happening in Florida, as well as a couple other key markets in the country right now. So on that note, do me a huge favor. Don't forget to smash the like button, comment down below, and subscribe to my channel if you'd like to see more great content on real estate, finance, and business. All right, let's jump into it. Now, another really important point that I want to make here is that the Fed is poised to raise the federal funds rate by probably another 100 basis points over the next month. Inflation, as you all probably know, came in at 9.1% year over year. And so the Fed is definitely going to continue putting the pressure on increasing those rates, which again, as they increase rates, it's very likely that mortgage rates are going to increase, which means buyers are going to continue leaving the market, leaving sellers high and dry. So if you're a potential seller and you're sitting on the fence right now, wondering if you want to sell or not, or wondering if you want to wait a couple months, definitely this is the time to do it. Again, right now, you're still probably not going to get top dollar like you would have 3 or 4 months ago. But again, prices are going to continue to decline over the course of this year. So if you're sitting on the fence, waiting to jump into this market as a seller, now is definitely your time to do it. And I just want to pull up this great article from Redfin here, which goes into a little bit more detail about what I was talking about. The Fed has signaled it may increase interest rates further to combat stubbornly high inflation, which could harm consumer confidence, and lower stock prices mean fewer prospective homebuyers can afford a down payment. I advise sellers to commit. If you decide to sell, do it quickly before demand potentially falls further, and price carefully. This is not the time to test the waters. You'll do more harm than good if you overprice and have to do a price reduction or take the home off the market. And this is something I've really been emphasizing for the last couple of weeks. People are still listing their homes at absurdly high levels that are way above what the market would suggest, thinking it's still July of 2021 instead of July of 2022. And things are not the same today as they were a year ago. So if you're going to put your home on the market, make sure you're really thoughtful about where you're going to price it, because homes that are priced reasonably and at market are still going quickly. But homes that are overpriced, literally I still see every day people pricing homes $50,000, $60,000, $100,000 over what it should be, hoping that they're going to get 15 or 20 offers like they heard about their friends getting a year ago, and then it would still sell for 20, 30K over asking. So remember, times are not the same. Price right, and if it's a great home, you're still going to sell it really quickly in this market. Now, I just want to walk through a couple of these housing markets, as I mentioned in the beginning of the video, where we're seeing some pretty extreme month over month sale price declines. So as you can see in this column, this is month over month change in price. And I really just want to focus on the markets that have more than a negative 3% decline. So you can see Anaheim here is really big at almost 4%. Austin, Texas is getting hit hard. Boise, Idaho, I think is actually the biggest one on this list at negative 4.5%. Remember, these are just month over month numbers. If you annualize this is well over 40, 50% declines year over year in home prices, which is just massive. Obviously, I wouldn't expect this to continue, but at least at this rate, but it's definitely signaling that things have changed, and over the next 3, 4, 5 months, as we head into the fall and the winter, home prices in many of these markets are going to be dramatically lower. Okay, as we continue going on here, looking for some other major declines, we have Greenville, South Carolina at negative 4.4%. Really interesting here, Vegas is flat, haven't seen any change there, and Miami, Florida Again, remember, later on in the video, I'm gonna show you some really interesting data on Miami. Just interesting, we're not seeing a decline there yet. See Oakland, California, negative 4.2%. Salt Lake City, negative 3.5%. San Jose, California, negative 3.8%. Seattle, negative 4%. Stockton, negative 4%. And I think those are the last major ones. So again, as you can see, it's hitting all around the country, but really starting to focus in California and the Mountain West markets, with a couple of, South Carolinas on here. But Florida, we really haven't seen these massive month-over-month declines in home prices yet, but I think it's coming and it's on the horizon. And as promised, I really wanted to jump into some really interesting data that shows why I think Florida is poised for a housing market crash. And this is a great article from Fortune titled, "A Housing Crash Would Sink These 16 Housing Markets, While These 23 Markets Would Be Spared." And just to set the stage a little bit for how this analysis was done, let's take a look at this paragraph. To calculate risk assessment, data scientists at Home.llc helped us build a forecast model using 14 metrics. Those metrics include building permits, land use restrictions, delinquency rates, housing inventory, and average home tenure. Finally, we grouped regional housing markets into 3 tiers: low, moderate, and high risk. The housing markets labeled high risk would, by our estimation, fare the worst in a housing market correction or crash materializes over the next few years. And all of this analysis led to this point here: the risk profile of each of America's 100 largest housing markets. You can see here in red are all the highest risk markets that Fortune believes are primed for a crash. And again, the first and most obvious thing you see when you look at this market is just look at all the red in Florida. I mean, really all of the largest markets for the most part in Florida are on here. We have a little bit around Atlanta and South Carolina and North Carolina. And interestingly, they have a market here in Iowa, and then the Mountain West, which this really aligns with the data I showed you earlier, where we're already seeing massive price declines in these markets. So we have Boise, Provo, /Salt Lake City, and then you have Phoenix happening over here as well. And let's take a look at what Fortune says is happening in Florida, because I think this is really interesting. Most Florida markets face significant risk of oversupply of inventory, Nick Shaw, CEO of Home LLC, tells Fortune. As the pandemic housing boom took hold, homebuilders across zoning-friendly Florida ramped up production. However, elevated homebuilding levels now leaves the Sunshine State at a higher risk of oversupply. If home sales continue to plummet, it could turn into a supply glut. That oversupply scenario, of course, is how markets like Miami, Las Vegas, and Phoenix got hammered so hard back in 2008. And again, what we're seeing in Florida is just that homebuilders have overbuilt. There was so much demand coming out of the pandemic that homebuilders saw a prime opportunity to ramp up production. And now that the market is starting to turn, interest rates are a little bit too high, people aren't moving around as much or moving down to Florida at the same rates that they used to be. And so now they're leaving just an oversupply or glut of homes on the market, and that we're going to see hit the market over the next couple months, leaving Florida prime for a housing market crash. And if you remember from the data that I showed you earlier, Miami and a couple other markets were largely flat in that the home prices hadn't really fallen month over month. And what I think is happening there versus what's happening already on the West Coast is that the tech industry has already been hammered this year. The NASDAQ is down massively, tech stocks are down all over the place, and in the West, they're much more exposed to that. While I think that Miami has a different profile, or Florida has a different profile or exposure to different industries. And because of that, that's why I think it hasn't quite yet hit Florida. But as we continue to move on into a recession, likely we're probably already in one. And if we're not in one, it's probably going to be on the horizon here in the next couple months. I really expect this to start hitting Florida hard, and we're going to see prices really come down quickly in those areas. All right, guys, that wraps up the video. I really hope it was helpful, and I hope that the data really was enlightening to you and showing you what's happening in the market. If you guys could do me a huge favor, smash the like button, comment down below if you have any questions or would like me to do any videos on any other topics in the future. And would be a great help to me if you guys would subscribe to my channel so you guys don't miss any more future content on real estate, business, or finance. All right, thank you guys so much, and I'll see you in the next one.